Being in the financial services industry, I often find myself thinking that everyone knows exactly what I'm talking about. I often have to slap myself because unless you're really in the industry on a daily basis, it's hard to keep up with the lingo or the terminology of the industry. The reason I'm bringing you this is because of this time of year, the term required minimum distribution, or RMD as it's otherwise known, is very popular. The funny thing is that many people who have, virtually everyone who has retirement accounts has heard of the term required minimum distribution, but they get extremely confused on how it really works or what it really means. So today I'm going to attempt to give you a basic understanding of what required minimum distribution means. So a required minimum distribution is generally a minimum amount a retirement account owner must withdraw from such an account once they reach the age of 70 and a half. Now remember that the RMD says that it's a minimum. You can always take out more than the minimum. You can't take out less than the minimum unless you want to get penalized, and we'll talk about penalties later. Now the RMD must be taken beginning in the year you turn age 70 and a half. But for your very first withdrawal, this is also a part that confuses people, for your very first withdrawal, you have until April 1st of the following year that you turn after you have turned, the following year after you have turned 70 and a half. Again, this is often the part that kind of confuses people. All other withdrawals must occur each year and must be taken out before December 31st. In addition, if you wait, this is one part that's very important, if you wait to take your first withdrawal until April 1st of the year after you turn 70 and a half, you must take out 2 distributions that year. Okay? One was for your April 1st distribution, which was for the following year, for the year prior, and one is for on December 31st, which is the required minimum distribution for that year. Okay, a little confusing, but it's only happened one time, and it's the part, and it's really becomes confusing to a lot of IRA owners when they hit required minimum distribution. Okay, now there are some exceptions to this. Okay, for example, if the person is still working beyond 70 and a half and they have a workplace retirement account like a 401k, they don't have to take an RMD from the 401k. However, once the person retires, then RMDs must be taken from that 401k plan. If they have an IRA, though, they must, no matter what, take distributions from that IRA when they reach 70 and a half, whether or not they're working or not. It doesn't matter. Okay. Now, how are IRAs or RMD distributions calculated? It's pretty easy. Basically, RMDs are calculated for each IRA that a person owns, and it's based on the December 31st balance of the previous year. Okay, so the IRS has basically a life expectancy chart, and you go in there, you take a look at your age, the life expectancy factor, and you divide it into the account owner's balance, and voila, there you get the number. It's very easily done. Okay, most institutions, custodians, as well as myself, calculate it for our clients, and it's not a big deal. Okay, now another issue that IRA owners have, though, that they don't understand what happens if you have multiple IRAs. Okay, and many people have multiple IRAs. They have 2 or 3 IRAs because they have different investments or so on, or they can't be commingled or something like that. But they have 2 or 3 IRAs. Okay, the IRS doesn't care which account you take your required minimum distribution from. Okay, all that they care about is that you take your entire required minimum distribution. Now, if you want to take that entire minimum distribution from one account or split it up into 10 of your IRA accounts, the IRS doesn't care. They just want to make sure that you took it out. Okay. Now, let's get to the penalties. What if you don't want to take out your required minimum distribution? What if you have enough money, enough income, and you don't feel like taking it out? Well, Required minimum distribution is there because the IRS says, you know what, that's the end of the game. We want our taxes, okay? So they don't want you to fool around with the taxes, and of course, especially now when they need them more than ever, okay? If an IRA account owner decides not to withdraw their RMD, okay, or withdraws less than the full amount of their RMD, or doesn't withdraw their RMD by the deadline, okay, the amount not withdrawn is taxed at 50%, okay? Now there used to be a time that most people knew this rule, but the IRS never received information as far as your required minimum distribution. They do now, so you can't mess around with required minimum distribution. You have to take it whether you like it or not, okay? Because they're going to penalize you 50% of the amount not withdrawn, okay? Ouch, you know, that 50% penalty, that's pretty big, okay? Uncle Sam makes sure that you don't mess around with him on this, okay? And the last thing you want to do is make the IRS mad at you. So, well, I hope that you now, with these little bit of basics, you understand RMD and how required minimum distribution works. And of course, always remember, ignore Wall Street and get on with your life. Thanks for watching.